Walid Baki, yes, regular patient of icbf conference.
I'm sorry I couldn't come to Vietnam this year, but most likely next year I will. Definitely.
Okay. We record your promise.
Yes. You coming to Sydney to the conference in University of South Wales this in December?
Yeah, I will.
Okay. So then I'll see you then. Definitely.
Leave some time so we can be together, right?
Yes, definitely.
Okay. So we have the Professor Aviral. Is connected. Yeah, Aviral, we are waiting for you. We have Professor Aviral Tiwari already joined the conference. That wait for him a few minutes so that he can be ready with the uh, presentation. Okay, the section chair for this presentation, Srino, are you ready? Are you clear with the technical issue? Any problem? Okay, let me take the opportunity at the host to welcome every one of you to participate in ICBF 2022 conference. It now the session for the keynote speech by Professor Aviro Kumar Tiwari, and this section will be chaired by Dr. Associate Professor Neva Srinu. Um, I would like to take the opportunity to thank the keynote speaker, the session chair, the presenter, conference participant, and coordinator, admin staff for today's session. I will hand over to the session chair and the keynote speaker to start the session. Thank you.
Yeah, thank you, sir. Yeah, and I would like to request to Professor.
Sao ông chơi cái quạt lớn luôn, cái quạt mà cánh dài 5 mét á, ba cánh ha.
I would like to request Professor Aviral Tiwari, and is a great researcher. And please go ahead, sir, with your presentation, but keynote address.
Okay, thank you so much. Am I audible?
Yeah, you are very clearly audible, sir.
Okay. So the topic of my today's talk, keynote speech is asymmetric time frequency relationship between climate risk and real estate token. So the idea behind taking this topic was basically taking the idea of Bitcoin generation. As we know, it started in 2008, And since then, there's a lot of research and lot of initiative and lot of problems also Bitcoin has created in terms of financial portfolio management. So now it has been considered as one of the asset class, you can say, although it is not legally valid in many countries. So, but another problem that comes with this Bitcoin mining is because it is entirely based on the way the cryptographic puzzles are solved, and once someone is able to solve, there is a reward in terms of generating one Bitcoin. So here, one issue is there that each unit of Bitcoin generation requires lot of energy consumption, and therefore there is a huge amount of carbon footprint that is created in the environment. Mining of this Bitcoin is not very much similar to the traditional metal mining. There are some differences. For example, where we talk about this mining here, so there has been some people who are in favor of mining, and they say that mining of Bitcoin is basically done in the regions where we have a lot of energy surplus, or they adopt to low cost technologies. Whereas some critics, which are against to the Bitcoin generation or idea Bitcoin generation, they talk about like it requires huge amount of energy consumption. And for example, 2018, this was about 62.3 terawatt hours that electricity was consumed in the Bitcoin generation activities. Okay, and therefore it has got a potential to elevate the temperature, global temperature by 2 degrees centigrade in itself. Now, exploring the environmental impact of Bitcoin mining and non-fungible tokens is one of the main issue of this paper. So we know that there has been real estate investment trust, and we want to examine their impact on the climate change. We also know that there has been surge in blockchain-based transactions, and that is raising questions on the sustainability. Okay, there is shift, if you see, in the Ethereum from proof of stake uh, to proof of stake, from proof of work, which is considered as a positive step towards environmental concerns. Okay. Now, talking about this REITs, there has been significant proportion of global equity market, and there is a suspicion that gradual acute climate risk would be created with these tokens. REIT tokens represent basically digital assets which are backed by real estate portfolios. They offer fractional ownership and liquidity through blockchain technologies. They enhance market accessibility by enabling fractional ownership of real estates, traditional inaccessibility to individual investors, and therefore leveraging blockchain. REIT's tokens offer transparency, security, efficiency in transactions, and reducing cost and enhancing environmental trust. Now, investors can diversify their portfolio with REIT tokens, gaining exposure to the real estate markets without direct property ownership, and mitigating risk through broader asset allocation. So, with this background, our objective is to examine the relationship between real estate tokens and climate change. A brief review on real estate token, since there is no direct connection to it. So we are trying to link it Bitcoin mining and how it has impacted the climate change that is proven in the literature. So if we talk about impact of blockchain supporting NFTs on climate change, there has been studies by Brown, Wayne et al. And so many others. Bitcoin mining has generated about 39.95 megatons of CO2 emissions annually, as mentioned in the studies by Zhang et al. Okay, which is equivalent to New Zealand's per capita carbon footprint. So one can see, and therefore there is also evidence by Zhang et al. In 2023 paper and Corbett et al. In 2019 paper that Bitcoin mining has generated approximately 1% of global CO2 emissions. Now, talking about literature which deals with mitigation and regulation in blockchain industry. So, as I just mentioned before, that there has been shift in the Ethereum side from proof of work to proof of stake. So therefore, it has sort of some impact on the reducing NFT sector emission. Additionally, regulatory measures capping Bitcoin total supply is another important thing that has come up. Okay, importance of accessible national carbon footprint data is another important issue that one can trace and how much emission is done. So accordingly, regulations can be made. There is also necessity for sustainable green energy in cryptocurrency, as again mentioned in the studies by Zhang and Corbett et al. Okay. Now, talking about the literature on REITs and climate change, there are studies by Salcius et al. In 2023, which talks about impact on US equity RETs returns returns volatilities. Okay, so which talks about also in that it is mentioned that about 35 trillion USD market cap is there, and 50% of the global equity markets are with REITs. So accessibility for the favorable various investors is it has created RETs has created, and there is also susceptibility to gradual and acute climate risk. So these are some of the issues with the RETs and the climate changes, and why the idea which we started to blockchain mining. So the method that we have used to study our research objective is cross control proposed by Han et al. In 2016 study. The advantage of this method is to provide quantile dependence between two time series or stationary time series, okay, which kind of give evidence of directional predictability. Now, this measure of dependence is able to provide dependence across different distribution segments in the stationary data using cross-control approach. Another advantage of this method is that it does not require any movement conditions for the time series to be satisfied, and therefore, and it captures the joint distribution properties, and also one can assign any arbitrary leg that one is interested in examining. So we don't have any specific method for lag length selection in this particular approach. Another methods that we have used are like rolling window wavelength correlation method. This method measures the in the rolling approach, in the rolling way, how at different frequencies time series are co-varying. Okay. The idea here is to apply data set to observe how relationship changes over time. We also utilize wavelength correlation for the time frequency analysis, and this helps us to identify different factors which could have been influencing the relationship within each rolling window. Last but not least, we analyze the impact of climate change on REIT tokens, return series using mod weight correlation and 22 days window size with two decompositions level J, where J is equal to 2, indicating 1 to 2 days frequency and 2 to 4 days frequency. Now, sample data for the climate risk indicators, we had used physical risk index and transition risk index. Data is obtained from a study of Hu et al. Uh, this PRI and TRI were developed using 2.5 million climate risk related news articles, and therefore one can say it is very comprehensive. I mean, coverage of climate risk related issues when this index is created. In PRI, we assess the financial impact of gradual and abrupt physical climate changes, and in TRI, we measure cost associated with the transitioning to a low carbon economy driven by climate policies, technology advancement, and public preferences. So, for REIT tokens, we have the Propi, we have Atlant, we have Realio Network, and IHT Real Estate Protocol. Now, the sample period for the study is June 2022 to 2020, June 2020 to June 30, 2022. The starting point was determined by the availability of RIO data, and the end point was based on the availability of climate risk data. In this period, we have seen the major events that has happened, such as COVID-19, regulation on greenhouse gas emissions, and US rejoining the Paris Agreement and Russia-Ukraine war. So, the approach that we have used is able to capture all of the issues in a very beautiful way, and therefore, the approach is justified in the context of my study. Okay. RET, REIT tokens data is collected from coinmarketcap.com. Now, this is a simple return series plot of the data that we have used. And as you can see, in certain periods, like in 2021, in the early 2021, and in the later, and again in 2021, ATL, and most of these series are having a spike in some cases. So therefore, normal approach or normal method might not be able to capture such spikes because they appear as an outlier in the return series. Now, looking at the summary statistics, one can see that highest mean is ATL is having, and of course, this is the variable which has highest variance as well. Uh, all of these series are not normally or normally distributed based on the A/B test, and they also has kurtosis skewness, and Q statistics indicate that they have they follow quantile distribution. All series are related. You can okay. BDS test is another test which provides non-normality. Which provides kind of validity that our data does not follow normal distribution, and therefore normal methods based on normality assumptions might not work with this particular data. So results from the cross controllogram are presented here, and as you can see with ATL and PRI, so in the top we have quantile 0.05, to the end there is a quantile 0.09. Different colors indicates the degree of the integration in the market. So the red color indicates the negative correlation, and complete white color would indicates no correlation, and dark blue color will indicate you can say perfect positive correlation. So this is how it is. And in terms of significance of the stars, so white stars indicates uh, at 5%, sorry, at 1% level of significance, and red stars indicates, black stars indicates at 5% level of significance. Now, in terms of dependence, if one is interested to understand, one can see, say for example, for ATL, at the bottom level of quantiles at 0.05, and for PRI, it is uh, at the little bit higher level of quantiles. Okay, but below the median quantiles, there is a very much significant positive correlation or positive impact at lag 1. Likewise, at lag 2, at lag sorry 22, there is no significant, but there is again significant evidence that one can observe at lag 5. So, in general, the impact of the transmission is happening, or the dependence you can see is happening at lag 1 and lag 5 at most, and at lag 22 is not happening. So one can think of that entire dependence or the impact of volatilities is being transferred or it being spilled over to other series within a week, mostly for all of these variables. So similar results one can observe from here. Here we do not see any significant issues, but at at leg 1 there is a significant impact, but leg 5 nothing is there, and leg 1 nothing is there. Again here at leg 1 one can see significant impact, leg 5 significant, and at leg 5, leg 22 there is no significance observed. In this particular case, we see at leg 1, there is only one some stars which is again at the lower quantiles of both of the variables, and for higher lags, there is no significance. So, to summarize of all of these results, will present. Let's look at the wavelet correlation rolling window results. So, here D1 is representing 1 to 2 days frequency, and D2 represents 2 to 4 days frequency. And the time period are there, on the x-axis. Here again, color pattern is same. Negative red color indicates a negative correlation, and positive, blue color indicates a positive correlation. And one can observe that evidence of negative correlation are little bit in general high between 2020 to 2021, and again just after 2021. This might be due to, basically here we see the COVID scenario. Okay, and it is there and more evident at frequency D2, means which is 2 to 4 days frequency. Okay, it is for it was for this RIO and PRI. So likewise, one can look at the second figure, PRO and PRI. Here, the negative correlation is observed at again 2021 on the 7th month, uh, and it starts, you can say, after maybe third month of 2021. Okay, at frequency 1. So these are basic observations one can draw from figures like this. So let me maybe summarize the interpretation of all of these figures. So if you look at, if we summarize the figures, so the finding says that cross-controllogram analysis, which is able to uncover the varying strength of negative and positive associations between the variables that are being analyzed, especially climate risk variables and token coins of real estate. So for ATL and PRI, they exhibit a significant negative relationship in the shorter lag, supporting the potential diversification benefits of REIT tokens against physical climate risk in the short run. Likewise, patterns are observed across IHT, PRO, and RIO, emphasizing a short-term sensitivity to physical climate change with diminishing impact over the long horizons. TRI showcasing heterogeneous impact on TRI on REIT tokens with a significant negative association in the shorter horizons of IHT. Now, PRO and RIO have demonstrated the mixed impact, reinforcing the role of REIT tokens as a potential diversification tool against the traditional climate risk asset class. Now, rolling window wavelet correlation, of course, reveals, as we have seen, that across periods, relationship is varying from negative to positive and so on and so forth. Okay. In 2020, this ATL has shown stable and low positive correlation with physical climate risk, contrasting with the fluctuation to some negative correlation in 2021 and 2022, highlighting the variability of the correlation over a period of time. But at the higher level of decomposition, that D2 has mostly indicated a positive and stronger correlation, suggesting macroeconomic events like COVID-19 pandemic and geopolitical tensions could impact both REIT tokens and broader economic conditions. Similar pattern was also observed for IST, PRO, and RIO, reinforcing the negative correlation trend with the physical climate risk, emphasizing potential diversification benefits for the investors. Traditional risk has exhibited a stronger correlation in the short run, that is D1 scale, indicating regulatory changes impacting property valuation and operation cost, thus emphasizing the impact that REIT tokens can have. So, coming to the implications, policymakers can enable resilience to physical climate risk by investing in infrastructure, implementing robust framework. Regulators should promote sustainable investment practices among REITs by establishing guidance, integrating climate risk into risk management frameworks, and developing green financial products. Investors are advised to diversify portfolio across asset class with varying sensitivity to climate risk, leveraging on REIT tokens alongside with other investment to mitigate overall risk exposure. Given the short-term volatility that we observed, investors may employ hedging strategies, maybe like options or climate risk derivatives to safeguard against the adverse impact of climate-related events on REIT tokens. And we are done with my presentation. So thank you so much. If there are any questions or suggestions to improve the work, happy.
Thank you, sir. I think very nice presentation, sir. Maybe this is very innovative things we can say that. But after seeing that presentation, but presentation is outstanding, sir. But I have some doubt. Maybe I can clarify. Maybe at your end that may be different issue. But I also maybe if I can future based on extension I can develop. See, what are the asymmetric dependence between the climate risk factors and REIT token returns, sir? Maybe any factors will be there, sir, on that.
That factors we have not analyzed.
Okay.
We only objective was to identify the dependence and why this dependence is there. That is another research question. So one has to
Okay.
further explore because once we obtain dependence, then one has to run regression or maybe something else to see what are the variables that affect dependence.
Okay. And again, I have some methodological specific question I have raised in my mind. Maybe in future, maybe I will go, maybe I will get. See, does any rolling window correlation analysis provided about the time varying nature? In particular, you have mentioned in that rolling window correlation, sir. Any kind of time varying nature of this relation is there, sir? Any kind of?
Yeah, it's there as you can see in this particular over period of time correlation changes.
Okay. Okay. Yeah. And see, basic application questions are this one. Generally, how does change in REET token price affecting climate changes indices, index or indices, whatever it may be?
No, this is not affecting climate risk. This is being affected by climate risk.
Being
Basically,
affected in climate.
yeah, because investors' assets class are being affected by all the major, whether it is climate risk, whether it is geopolitical risk, but indices doesn't affect either climate risk or they do not affect political or geopolitical uncertainty, right?
Okay.
These
Okay.
are events that are being impacted. So analyzing
Okay.
reverse, like why government decides that which stock market should go, no. Government takes some decisions and therefore any stock goes up or down, right? It
Okay.
doesn't happen because stocks has gone, so government is going to take some investment decisions or something like this. So
No.
mostly it is the policy that impact is there. And why we say that REIT tokens should be taken because they are a little bit more climate risk innovative ideas based on that. So it provides a kind of little bit more, you can say, safeguard. Other risk
Okay.
might be, other asset class might be more risky in the climate uncertainty environment. But here
Yeah.
benefit would be more because they are mostly associated with climate risk. So when risk goes
Yeah.
high, they give more return to you.
Okay. Thank you, sir. I think at my end, these questions, maybe your presentation is very nice and really appreciate. Maybe any other, please. Any other, if you want to ask question, please. If you have any doubt or any suggestion. Yeah, I think if you don't have questions, maybe we can, yeah, please coordinator, you can take further.
So I close and I leave out.
Yes. Yeah,
Okay, so thank
coordinator.
you so much.
Thank you so much, sir. And a very nice presentation. And just 1 minute, sir. I think coordinator she is coming.
Hello, sir.
Yes.
Dr. Screen. Yes, yes. I'm the coordinator of this
Yeah,
session.
please.
Okay,
Okay.
so thank you very much for the great presentation from Professor. All right, so I wonder we have any other questions, comments, or sharing. If not, I think that's great to have a nice, lovely photos all together. And please, for the participants, please give me a favor. Please turn on your cameras so we can have all the lovely faces. All right. Mr. T, the admin, can you help us take a nice, lovely photo, please? While we're waiting for people turning on the cameras.
Yes, okay, my pleasure.
Yes.
Yeah, so everyone, please turn on your camera. Okay, so I will count to 3. 1, 2, 3. Okay, that's beautiful.
Okay. Okay, Miss Lynn, our MC for ICBF this year, do you have any message for our participants for today's agenda?
Yeah, thank you, Mr. So everyone, I think on behalf of the organizing team, I would like to say thank you for your collaboration, for your participation, and very active discussion during the parallel sessions. I love it. So let's look ahead to the next segment of our conference, which is on this afternoon. That is the main one. So let me share the agenda for today. The afternoon session. So please make your ready at 1 p.m. and then join the main part of the conference.
Okay, I am leaving out.
Thank you. Thank you. Thank you, sir.
Thank you. Thank you very much. See you.
Thank you.
Yeah.
Thank you very much. Thank you.